Thomas Haar joins us. He is Senior FX Strategist, Standard Chartered Bank, here at our Asia headquarters, together with our guest host, Jim Rogers from Rogers Holdings. Thomas, good morning. Great to have you on. We'll get to the issue of the probability or possibility of RMB becoming, taking over from dollar in just a bit. I want to talk more immediate term, though. The event risk coming up end of the week. Payrolls, what are those numbers going to look like for you, do you think?
I think it's going to be a strong number again, as we have seen for the last couple of months. And the bias has changed clearly from the strong payroll numbers actually being positive for the dollar, instead of just being bearish for the dollar because of improved risk appetite. So we do expect the dollar to actually have a brief rebound against the majors. But the trend against the Asian currencies is clear. Okay. More currency appreciation in Asia, except from in China.
Okay, all right.
Which Asian currencies in particular would you play that trend on, Thomas?
I mean, in terms of the Asian currencies we like the most, the clear leaders in Asia, in our view, is Korean won and Indonesian rupiah. I mean, the trend is there. It will not go away. These currencies, Korean won, for example, is still pretty cheap from a valuation perspective, and you still have that the economy is picking up clearly. You have much better external balances in Korea. Bank of Korea will smooth the downtrend in dollar Korea, but the trend is there. It will not go away. And that will lead this gradual currency appreciation we are seeing in Asia, and which we think will continue heading into Q4.
In which case, Thomas, at which point will the MAS start to let the Singapore dollar strengthen a little bit? I mean, it seems to be holding it back, even flying in the face of what seems to be an economic recovery, gaining ground in the region.
We think the MAS will keep still a neutral FX stance here in October and probably also in April, because the economy is still pretty weak in terms of the export growth.
The yen, I mean, maybe I'm the only person who owns the yen in the world, but how do you see the yen?
I think the yen is, in our view, we can still see it move lower. We think it's something like 85, 88. But we do think that the bottom will come here. I mean, we have got very conflicting comments from Pucci, as you know, the finance minister, which is a bit interesting. I think what he's trying to say is that medium term, Japan has to transform its economy. It cannot rely on a weak yen, which is, of course, on a medium term perspective, positive for the yen. But I do think that the market is underestimating intervention from the Bank of Japan on the very short term, given the pain Japan will suffer from a much stronger level in dollar yen from here.
Thomas, as far as the risks are concerned to the US dollar this fourth quarter, if we do get more evidence and more signaling from China that it is continuing to diversify its holdings away from US securities, is that going to be a factor that could undermine the dollar?
We are clearly dollar bearish. I mean, we're looking for euro dollar to go to 155 at the end of the year. We are looking for the dollar, as it usually is, weak in Q4. But the key argument is a cyclical argument. The dollar is normally weak when the global economy is recovering. That is exactly the same we saw in 2002 to 2004. We think that is playing out now. That is, I think, is more important than reserve diversification on the short term. Longer term, that may be important.
Did you say you were bearish on the renminbi or bullish on the renminbi?
Renminbi short term, we expect China, the Chinese authority, to keep it stable. We don't expect them to move before second half of next year, where you see a more clear trend in exports and in inflation.
But the renminbi will go up or go down? I own the renminbi for full disclosure.
Yeah, no, we think the renminbi in our view is still clearly undervalued. I mean, some is arguing that the trade deficit that China could have a trade deficit next year.
Okay.
But many other arguments for that it's undervalued.
All right, Thomas, as well as Jim, we've got an email in. I want to pose this question to both of you. This is from a gentleman named Dave Kiyama, writing in from Australia. It says, China has literally stolen America's manufacturing base by pegging its currency. When do you think they will unite with America and float their currency? Thomas?
We think they will have it pegged, as I said before, basically until exports recover into double-digit growth and CPI go by above 3%. That is the line of the thumb we have in our mind. We think that will happen in second half next year. But if you look multi-year ahead, 2015, our forecast is 5.50.
All right, Jim?
Well, for what it's worth, Dave, America insisted in 1994 that China peg the renminbi to the dollar, so America was in favor of it in the first place. I would have thought they would have let it float by now. It's in China's interest, it's in the world's interest for them to do it. Whether they do it this year or 2011, I don't know, but it is coming. And as was pointed out earlier, they are opening it up more and more every quarter, so they're moving in the right direction.
Gradually. Okay, we'll be back with Jim Rogers, our guest host, in just a bit. Again, email us questions for Jim at squawk@cnbcasia.com. We need to say thank you and goodbye to Thomas Haar from Standard Chartered Bank.